Hey guys, welcome back to another video. My name is Josh, and in today's video we'll be talking about some of the Reddit Wall Street Bets famous picks. So that's GameStop as well as AMC. Now these two stocks have been talked about a lot in the media, in the financial space, because these two stocks have literally gone up so quickly, and today as well we saw them go down just as fast. So today I'll be talking about those two stocks, some of the news around Robinhood as well, and my thoughts on the entire situation. So if you enjoyed today's video, be sure to hit like and subscribe. And as always, this is not financial advice. I'm not recommending you to buy any of these stocks that I've mentioned in this video. It's not a buy, hold, or sell recommendation, and I'm not a financial advisor. You can read the full disclaimer down in the video description below. But without further ado, let's get right into the video. So the first thing that you need to understand if you're new to the whole situation is how shorting works. So when you short a stock, you essentially sell the stock without actually owning the underlying asset. So for example, if a hedge fund wants to short GameStop, what they'll do is they'll go to their broker and they'll borrow one stock of GameStop or however many stocks they want to short, and then they'll sell it at market. So for example, if GameStop is trading at $10, they'll receive $10 in cash today. And then say 1 week later, if GameStop's share price drops from $10 to $8, then they can buy back the stock at $8 and return the stock back to the broker and pocket the $2 difference. And likewise, if the share price goes up instead of down, then the hedge fund will lose money instead because they have to buy their stock back at a higher price to return it to a broker. So that's essentially how shorting works in the market. Now, GameStop was heavily shorted in the market. Essentially, GameStop was shorted on 140% plus of its shares outstanding. So for example, if GameStop's share count is 69.75 million, having a short of 140% means that there should be around close to 95 million worth of shares shorted, right? So essentially that is a lot of risk involved. And if someone decides to buy the stock and push the price up, then that could cause a serious short squeeze. So a short squeeze is essentially when a short position has to be covered. And so when you cover a short position, you take the opposite direction. So you have to buy back stock to cover your short position. And so when you buy the stock, it continues to push the share price up and up and up. And that is how you end up with a situation like this. So this started around late last year. It got pushed up based on good news from GameStop. They announced the co-founder of Chewy to the board of GameStop to turn around the e-commerce side of things, and that caused a bump. And as more people on the subreddit joined in forces to buy more GameStop to push the short sellers out of the market, to cause a short squeeze that continued to rally and caused the share price to go all the way up to around $137. So that has caused a lot of media frenzy, a lot of stock market frenzy in the market, lots of trading volume. And today there was news that was announced that Robinhood had placed restrictions on GameStop and other stocks, including AMC. Now, I'll talk about AMC a little bit later, but basically they are stopping people from buying any shares. They can still sell their existing GameStop shares and options, but they cannot buy any more new shares. And that has caused a lot of panic in the market because people who want to buy can't. And that also caused a flow-on effect for people who own the stock, because they're thinking, now that the buyers can't buy the actual stock, the share price is only going to go down with less demand and more supply. This is not a good sign for retail investors, because this is essentially Robinhood taking away the free market aspect of stock trading, right? So people who want to buy can't buy, but they can sell, and that essentially just reduces a lot of buyers in the market. So that is what happened with GameStop's shares, and likewise we can also see the same thing with AMC. The share price did drop today as well, down 56%. So these are massive moves, really big moves, and that is a result of people selling out because of restrictions to trading that stock. Now, recently there was news around Melbourne Capital closing their GameStop position. Now, there was some news out there that was saying how this necessarily wasn't true, or there was some doubt over the validity of the information, the accuracy of the information, because like lots of people out there tweeting The short interest never really dropped that much. Like if they said they were closing their positions, you'd expect a big drop in the short interest. But as of yesterday, there was still quite a high percent of short interest. So this was tweeted just minutes after this article was produced, that Melbourne Capital, who is the shorter in this case, the company with the biggest short, the hedge fund with the biggest short, potentially never closed down their short position just because of how much short interest there is. So I tried to look for information around GME's short position. I got on this website, shortsqueeze.com, but over here it says that the shares shorted are 61.78 million. So I'm not sure when this was accurate as of, but if it's 61 million and we know that GameStop's shares outstanding is 69 million, then there's still plenty of shares outstanding that are still shorted. And what that means is there could be potential room for GameStop's share price to continue to rally. And that's what we also see here in the after hours, currently up 70% plus. I still think there's still plenty of room in here as long as the short interest is still high. If GameStop's short position continues to drop, then there's really no more fundamentals behind this dramatic increase other than retail investors continue pushing the prices up. If they continue to push the prices up, then this becomes a bag holder competition now. It's just retail investor versus retail investor. As long as there's short position, then the story will be retail investor versus hedge fund who is short on GameStop. That is the thesis behind GameStop and why it's gone up so much. Do I think it can continue to go up even with the Robinhood trading restrictions? Yes, I think it can, because people who want to buy the stock will just switch to another broker, and at the end of the day, Robinhood will hurt themselves because first of all, they are getting sued. There's a lawsuit filed against them for changing the rules to meet other participants' demands. And also, I think they'll lose a lot of customers because of this, and they'll want to make things right again. So they'll try their best, I think, in my opinion, to basically bring back the ability to buy GameStop shares again. All right, so that's my thoughts on the situation. Now let's talk about AMC Stock. Now AMC is in a similar situation with GameStop. This is a business facing decline as well, a high short balance because of that, because people think that they won't do well. AMC is a theater business, and because of the Rona, it got heavily hit. So AMC was a ripe target to be shorted, and now the Wall Street Bets people are looking for other stocks, and AMC is like the number 2 stock. And people think AMC is the next GameStop. So similar rally that they experienced, if you look all year, all the way down, and then suddenly spiked up massively. AMC is in a similar situation. However, I think the fundamentals just isn't as good as GameStop because AMC has a smaller short position. GameStop has over 140% initially, but AMC initially only had roughly 50% or maybe even less, and now it's probably even lower than that. And furthermore, today there was news around how AMC decided to issue 4.4 million new shares as investors opt to convert 600 million of convertible debt. AMC Holdings said Thursday a group of investors, including units of private equity firm Silver Lake, have opted to convert all 600 million of the cinema chain's 2.95% convertible senior notes due 2026 into Class A common shares at a conversion price of $13.51 per share. The stock closed Wednesday at $19.90 after being swept up in the short squeeze in shares of video game retailer GameStop. Now, with AMC having 44.4 million new shares in circulation, this will dramatically reduce the ability to have any significant short squeeze, because a short squeeze really happens when there's insufficient liquidity in the market. So when there's not many sellers on the market, then when someone is squeezed out, when they have a margin call and they have to close their position out, they would essentially bid the prices really high because there's not many sellers out there. But with an additional 44.4 million shares, then this would not really be as bad of an issue as before, because now you have a lot more shares. It's easier to liquidate your short position if you have to. Now, I do have to caution that this only depends on whether if Silver Lake decides to sell that 44.4 million shares, because if they don't decide to sell that 44.4 million shares, then it'll just be like nothing has really happened, and AMC stock might still continue to to rally. So it really does depend on whether Silver Lake decides to sell those shares on market, but to be honest, I think they probably wouldn't, because they do have a conversion price of $13.51. As you can see, currently AMC stock is only $12.20. I'm not sure if they would want to take a hit on their position already, and maybe they're just in for the ride, you know, YOLO diamond hands, right? But personally, I don't think AMC's propositions will be as good as GameStop, just because GameStop has a lot more hype and a lot more following and a lot more of a short interest compared to AMC. So personally, I don't have any positions in any of these stocks at the time of recording. If I did want to put some money in, it wouldn't be a significant chunk of my portfolio, and it will just be fun money into this venture. So if you do decide to go on with this, please be careful out there. Only use money that you can really afford to lose, because this is a high risk play and there is a really good chance that you lose all your money. But you know, at the end of the day, it's not necessarily all about money. Sometimes it could be about the message. So if you want to stick it to Wall Street, then by all means buy some stock, if you will. Not a recommendation for you to buy any stock. Personally, no positions in these two stocks at the moment. So let me know what you think about these two stocks. Leave a comment on whether you hold these stocks or not and where you think these stocks are headed. And I hope you enjoyed this video, guys. Until next time, take care.